everyone. This is Ask Your VC again, and here we are with the next blog in our blog podcast in our series. So, Vispy and I have been looking at another company that just came to our attention recently, which you may have heard of, which is HomeShop18, and they've just filed to go public. So we've done a bit of analysis on our end, and I'd just like Vispy, maybe you can talk about some quick highlights on what we've seen so far.
Yeah, thanks, Murli. So HomeShop18 is a leading digital commerce platform company in India. And what that means is it's a combination of both television commerce and e-commerce. E-commerce would be the traditional online selling. The TV commerce piece is a lot like a shopping network. So what HomeShop18 does is it has studios and it builds 30-minute shows on the varied products that they source and also manufacture themselves. Products could include electronics, home goods, lifestyle, etc. And then they buy airtime on varied broadcasting networks and go out to the Indian consumer and provide the ability to do television commerce through the phone. Great company, very successful broadly in what we'd call X-commerce, which is everything associated with digital commerce. We'll start out with a few metrics that we've looked at. Then we'll talk about some of the local nuances in any kind of digital commerce in India and Southeast Asia and how it differs from the US. And then we'll end up with timing on why go public now, and Murli will, of course, address that. So we'll start with the high-level sort of growth metrics. So again, gross transaction value, which is the gross value of all the goods sold through HomeShop18. It's often called gross merchandise value in the US, so it's the total value of all sales that occur through the site. So that's got some pretty good growth for the first half of the fiscal year 2013, ending in September. The growth was about 48%. But the one nuance sort of we find is that if you look at actually the last 8 quarters, and we find it important to look at everything quarterly and also in Indian rupees, not converted to US dollars, because there's varied exchange rates as wide a range as 26%. So if you look at...
You can also add on that, I think the Indian rupee side, if you probably just clarify that both the cost and revenues are in rupees as far as this company is concerned. The dollar component only comes in as far as reporting is concerned.
That's right. That's right. That's a good point. So if you look at gross transaction value growth by segment, certainly television has grown very well in the last quarter and certainly meaningfully across 8 quarters. But the internet in the last 3 quarters hasn't. And in fact, internet as a total percent of business has declined for HomeShop18. And that we found sort of most interesting from a gross transaction value perspective. One of the huge positive outliers for this company is really the percent commission. Now, this is, of course, how net revenue is calculated, which is how much money do they make on every product that's sold. And they sell physical products, so it's, of course, a typical physical commerce gross margin. Theirs was as high as 27% in the last quarter. It's gone up and down, but it's stayed consistent at around 27 to 30%. Television has been as high as almost 30%, and internet has just gone up to 17% in the last reported quarter. These numbers we find are pretty phenomenal. If you compare traditional e-commerce, it's rumored, at least in India, it's rumored to be somewhere in the 4 to 5% range. So a really big difference. So they're doing something right here, backward integrating into sourcing products and a few other sort of key measures on this regard. The revenue trend line sort of follows the gross transaction value trend line, but I'll turn it over to Murli to really talk about how the exponential function fits the data as it pertains to the revenue trend line.
Yeah, sure. So, whoever's watching this, we also have this post which you can go online and see, where we've actually plotted a trend line that approximates, essentially smooths out both orders as well as total revenue of the company. And we can clearly see that we experimented with a few different kinds of trend lines. One was a polynomial fit, which didn't actually fit very well, and we tried a few others. The best one really was an exponential trend line. Now, before one gets too excited by the sound of the word exponential, to be very, very clear from a sort of a mathematical or statistical point of view, we're still in the very flat part of the exponent, right? So an exponential chart starts like that and just over time becomes almost vertical. we're in the very initial stages of an exponential line. So there's two aspects to this. One is uh, if one believes that this is truly an exponential growth company, then all the upside, really, this massive upside ahead. Crispy's pointed out a whole bunch of reasons why this is an interesting company already. But if you just assume that this model is a reasonable approximation of the future, then it's great. On the other hand, as I just said, 2 points. On the other hand, it may not actually be true. Maybe it's not an exponential growing company. There are very few companies which can do it forever, which can do it for even a few years, and nobody can do it forever. So essentially, I'm saying take it with a big pinch of salt.
That's a good point, Murli. The last parameter I'd like to talk about is one of the big local nuances in any kind of digital commerce in Southeast Asia and India versus the US. So in the US, it's of course near 100% credit card or PayPal or some electronic payment means. In India, HomeShop18 reported that in the most recent 6 months ended September 30th, 2013, that cash on delivery was as high as 84%. So what that means is people will buy product without providing any kind of payment. They'll order a product, and that product will show up at their door. The cost of the product purchase, the courier, is all borne by HomeShop18. And then the consumer will decide once the product's at their door if they really like it and if they want to buy it. And obviously, cash on delivery or COD traditionally has a huge return rate, rumored to be as high as 50 to 60%. That, of course, hurts gross margins considerably. And it's one of the reasons why most e-commerce companies in the region have been very capital inefficient, have had to raise large volumes. The market leader here in India is a company called Flipkart that's raised over 500 million to get to about $1 billion in gross merchandise value. And we think cash on delivery and the lower margins that result from that is the reason for it. So HomeShop18 was as high as 84%. That's incredibly high to have cash on delivery. On the positive side, their return rate was as low as 18.7%. That's really low for a cash on delivery business. In particular, the cash on delivery business standalone was about 21%. And of course, non-cash on delivery is very low, which is about 2%. So the return rate was compelling, but the COD rate being as high as 84% is really the highest we've seen so far.
That's very interesting. At a very high level, you pointed out very interesting sort of subtle nuances between how the shopping market works in India and more broadly Southeast Asia, India, compared to the US. At a very high level, though, if this is a US investor looking at sort of a shopping company out of India for the first time, why should he care? Isn't home shopping on TV, isn't that an old story? Why is this different?
I would say the bigger reason for that, at least for a US investor, Murli, would be two. One is it plays in e-commerce as well, and there's a component of e-commerce that'll never go away, even though, as we mentioned, it's been flat and declining a bit. But the second would be emerging marketplace. So the second would be going back to when the US home shopping channels first launched and their success and their growth rate based on the US population and the US middle class population, the US consuming class population, and what that'll look like for India. So I think it'll be a much more emerging market play, and the way it will be coined would be a QVC of India with an internet or an e-commerce component as well.
Very interesting. One point obviously, just like you, I'm very positive on the company. One point I am a little bit, let's not say skeptical, but let's say a bit careful about is, the company has pointed out in their filing that they have a combined reach of over 250 million consumers, right? And obviously, this number is going to grow over time. It talked about how McKinsey's projected the Indian middle class will be about 250 million consumers by next year, so on and so forth. All these sort of big positive numbers. At the same time, they do report that since inception of the company, about 8.9 million consumers have bought from a HomeShop18. That's not per year; it's total, right? So 8.9 compared to 250 million, it's a relatively small number. And there's a further point that brings a little bit of concern to me, which is repeat rates, surprisingly, have actually increased over time from 35% to 45%. Now, there's two interpretations to this. One is that, look, people love them so much that they just keep buying, and this is obviously a good thing. On the other hand, does it also imply that although your base is growing, your repeat rates are going up, which means that maybe are you reaching the point of saturation? I don't really know, but one does need to think about the point. So it's a large potential market, but how much of this are you actually going to be seeing? Now, there are several reasons why people actually may come to believe that it's not possible to reach this entire market, and those have nothing to really do with HS18, HomeShop18's fault as such. It's simply the sheer size of the country and the lack of sufficient infrastructure, sufficient roads, and so on and so forth, which is a natural limiter to the number of people who can go and transact with stuff like this. So there's many ways to actually reach the end consumer. This is just one of those ways, and I think the fact that they have a good base right now portends great news for them in future. While at the same time there are going to be headwinds I think coming up.
Yeah, fair point. So Murli, why don't you talk about sort of strategically why they're going public now? They're not the largest. Just to put it in terms of the market leader, so the market leader in e-commerce claimed $1 billion in gross merchandise value a few months ago. HomeShop18, if you take the total of their last 4 quarters, they were 191 million in gross transaction value. So clearly not the market leader. There's probably 1 or 2 other privates that are equally as big, if not bigger than HS18. Why be the first out of the gate?
Yeah, in fact, we can even look further than just India. Even if you look at China, which is a bigger e-commerce market, right? Let's not even talk about Alibaba. Let's look at something like JD.com, which is also going public. They've raised $3.5 billion, or almost $4 billion, compared to 500, 700, whatever Flipkart has raised so far. So, and they're still private. They're going to be going public soon. So in HomeShop18's case, I think the reason they've decided to go public is probably a very strategically, very, very smart move. Think about it as if you're the first, or let's look at the flip side of it. If you're the third person to go public from India as an e-commerce company or an ex-commerce company, as we call it, there's bound to be some amount of deal exhaustion, right? Some amount of concern among investors. Oh, goodness me, yet another company? I've already seen the top 2, 3 leaders, and what do I care about this fourth company? Right. So in that sense, for HomeShop18 to grab the momentum sort of by the scruff of his neck, right up front and set the agenda, it's very, very smart. Could they have raised money privately at this stage? Probably. They could have stayed private, continued growing organically, raising money, so on and so forth. But they chose not to do that, probably because they can essentially set the agenda now. In future, if somebody else goes public, or if even things like if Amazon revenues continue to grow up, keep growing at a fast rate and so on, that's going to help these guys, right? These guys will be seen as using them as a comparator.
Yeah, great point. First one out the gate is generally garners the most investor interest. So I would say kudos to them on that. And obviously listing on the NYSE is the right way to go for them in terms of investors who understand the business they're in.
Yeah. And particularly given that they haven't consumed much capital at all so far, right? So compared to all the other guys, these guys are just really efficient.
Agreed. Good. So for more info on a detailed analysis of ours, just go to askyourvc.com, and we've just posted charts and more analysis. Our resident CFA, of course, is the incredible source of wealth on that.
And we'll post the link to this to the blog post just below this video. You can see it in the description tab. Thanks very much. Catch you next time.
Thanks, guys. Bye.